This is The Gist, the essential podcast for the discerning listener.
Welcome to The Gist. I'm John.
And I'm Mary. It's Tuesday, July 28th, 2026. We are your smart friends on the go.
We break down the day's global news. We focus on the money, the power, and the incentives.
And we keep it strictly fluff-free. Let's dive in.
Let's start with the gist view and a massive tech sell-off. South Korea's Kospi plunged 11.5% today. That is the country's main stock market index.
It hit its lowest point since mid-April. Heavyweights like Samsung and SK Hynix dragged it down. SK Hynix is a major South Korean supplier of memory chips. Both of their stocks dropped over 10%.
The trigger? Fear that the artificial intelligence boom is slowing down. But here is the real story.
Right. The Financial Stability Board, or FSB, is weighing in. They are an international group that monitors the global financial system.
John Schindler, the FSB Secretary-General, spoke to Politico Europe. He warned these artificial intelligence asset overvaluations risk a global bubble. He actually compared it to the 2008 financial crisis.
But that diagnosis completely misreads the market. When tech stocks drop, equity investors take the hit. That is a transparent, healthy market working exactly as intended.
Exactly. Think of it like a controlled burn in a forest. It clears out the dead wood. The 2008 crash was totally different. That was driven by hidden, highly leveraged debt. It was an underground fire no one could see until the ground collapsed.
The FSB wants to treat a routine stock drop as a massive crisis. Why? Because treating it as a crisis expands their regulatory authority.
Who benefits? Regulators get more power. Now, there is a real risk, but it's not in the stock market. Artificial intelligence infrastructure relies heavily on syndicated debt. That means massive loans shared by multiple banks.
If tech valuations truly collapse, those lenders could take a direct hit. That could cause a real cash squeeze downstream. But a standard stock repricing, that just resets the board safely.
Moving to the global overview, the Trump administration just slapped new tariffs on 60 trading partners.
And businesses are scrambling. CMA CGM, a massive French shipping logistics company, expects ocean freight demand to stay sky high.
The Financial Times reports United States importers are hoarding goods. They are stockpiling inventory to beat the new tariffs.
It's a classic rush for the door. When governments raise border costs, corporations spend heavily up front. They lock in cheaper goods now to protect their profit margins later.
Elsewhere, geopolitics is hitting the bottom line. The Wall Street Journal notes that S&P Global missed its profit estimates.
S&P Global is a major American financial analytics firm. They pointed directly to the United States-Iran war as the culprit.
Why? The conflict has frozen their ability to raise prices for business contracts in their energy data unit.
It is a clear example of how geopolitical friction drains corporate pricing power. Wars create uncertainty, uncertainty locks up budgets. Companies just won't pay higher rates when the future is blurry.
Let's turn to the European perspective. In France, the National Rally is rewriting its playbook.
They are France's primary nationalist, right-wing populist party. Politico reports they are quietly tweaking their promised retirement reforms.
Two party officials confirmed the shift. Why back down on a core promise to voters? Because they are getting closer to actual power.
This is exactly how proximity to power domesticates populism. You can promise the moon on the campaign trail, but sovereign bond markets act as a strict veto. If global investors don't believe you can pay your national debts, they stop lending. By watering down their pension plans, the party is pivoting. Right, they are moving away from pleasing working-class voters. Instead, they are appeasing institutional investors. They need the market's blessing to govern.
They are also likely delaying the explosive pension issue on purpose. They want early, easier legislative wins on immigration and security first.
Over in the United Kingdom, a big shift in pharma. GSK, the British multinational drug company, is closing its historic Stevenage facility.
The Financial Times reports they are moving their main research centre to Cambridge.
It's all about the talent pool. Modern capital demands dense knowledge clusters.
If you want to build new medicines, you need the smartest minds in one room. Embedding in a major university city gives GSK direct access to that concentrated talent.
Finally, let's talk about dirt. Degraded soil costs the European economy over €50 billion every single year.
Euronews reports that European scientists are fighting back. They are deploying artificial intelligence to monitor agricultural land.
This is a massive upgrade. Artificial intelligence tools give state agencies exact, granular data on soil health.
Who benefits? Governments do. With precise data, they can restructure farming subsidies.
Exactly. They stop paying for bad practices. Instead, they redirect that capital towards sustainable farming. Artificial intelligence is literally reshaping how money flows into the ground.
That brings us to today's temperature check. Globally, capital is seeking shelter. Whether it's ships rushing to beat tariffs, farmer clustering in elite university towns, or politicians bowing to bond markets, money is setting the rules. Meanwhile, regulators are eyeing artificial intelligence's stumbles as a chance to grab the reins. It's a day where market gravity pulls everyone back down to earth.
Beautifully put. And that is the gist for Tuesday, July 28th, 2026.
If you found today's breakdown helpful, we'd love for you to join our community. You can subscribe to the Gist's daily newsletter completely for free. It is the perfect companion to this podcast. Just tap the subscribe link right there in the show notes. No spam, just the facts. We'll see you tomorrow.
The Gist, News Digest, and podcast are entirely written and produced by artificial intelligence. The Gist is out 3 times a day, every day, providing you with a liberal perspective on what to expect next. For more information and donations, visit thegist.online. Thank you for listening.